Hello and welcome. You're watching Business Today Television. I'm Sakshi Patra and this is the earnings special edition on Market Today. Remember, for Q4 FY24, the company on our radar is Anand Rathi Wealth. That's recorded a net profit of 56.9 crores. That's up by 34%. The revenue from operations has grown by 35% for the company in this quarter to 197 odd crore rupees compared to the previous fiscal. Now, EBITDA has also increased 20% to 73 odd crore rupees from 60.9 crore rupees in the corresponding fiscal year. We've also seen that the margins have also come in at 39.7% as against 42.6% that were recorded in the previous fiscal. What's more is that the board has also approved the final dividend of 9 rupees per share for FY24, and there's also the proposal of the first ever buyback from the company of equity shares worth about 165 odd crores that the company has announced this time. So to discuss the earnings, the outlook on FY25 as well as some more details on the buyback front, I'm now joined by the top management of Anand Rathi Wealth. Mr. Anand Rathi joins in. He's the chairperson of the Anand Rathi Group. Also joining in is Mr. Rakesh Rawal. He's the CEO of Anand Rathi Wealth. Welcome to both of you and thank you so much for taking the time out for this discussion on Business Today. First up, congratulations. You've had a fantastic quarter and a fabulous FY24. So let me start off with you, Mr. Rathi, to tell us, are you happy with your performance in this quarter and in this entire fiscal year? You could also help us understand what really worked for you and what is the outlook that you see for the company.
Thanks for having us and also all the best wishes to your viewers. I think I'm very extremely happy with the performance which we achieved. As you have seen that our performance is better than even our revised guidance which we have given last quarter.
Yes.
And I think a lot of credit obviously goes to my clients who have been very, very, sort of sticky with us. They've increased their investments. They've been net inflows. And obviously all my colleagues and employees who have worked hard throughout the year to achieve these results. So I think what you'll find, Sakshi, important is a very consistency which we have been able to achieve our results. And also by and large, every time we are trying to beat the guidance or target which we have given to the market.
Absolutely, you've beaten guidance on a lot of fronts and I will be coming to you as far as some of those guidance is concerned to give us fresh targets for FY25 as well. But let me also include Mr. Rawal into the conversation. So Anand Rathi Wealth has announced a buyback of which will be at around 4,450 rupees per share is what we are given to understand, a 9.9% premium to Friday's close, and we've already seen the stock inch up higher today. Mr. Rawal, give us a sense of what was the thought process behind the buyback and what will be the record date? Will the promoter be participating? Some more details that you can share for all our viewers, sir.
Well, I think the fundamental of this is that we are a cash generating business with little requirement of cash in terms of capex and other areas. And therefore, predominantly, rewarding shareholders has to be an integral part of the strategy. Now, that strategy so far has been fulfilled by increasing our dividend payouts. And I think this year we are including in that strategy buybacks as well. And therefore, this year, for example, the buybacks are done to the extent of the maximum allowable limit, right? And that is something that we are very happy that if we are succeeding in the company, we should reward our shareholders as much as we can.
Okay, all right. So that's the thought process behind it. Mr. Rathi, if you could add on to that, for so far you're saying that, your clients have had your biggest support. Your shareholders have been celebrating the rally that the stock prices have also shown and displayed after the earnings have shown promise quarter after quarter in this entire fiscal year. The stock is already up 60% odd. How would you think that the company is poised to move on across the funds with the kind of markets that the way they are progressing, the kind of client additions you've been doing? You now have active clients of about 10,000 which you had set out. You're already at that level. What would be the fresh targets now?
Well, first of all, let me also thank all our shareholders and investors who have reposed faith in us. And I'm also happy that they also feel truly rewarded. That has been our policy all through. Now, business-wise, I think as such, the wealth is growing in the country. And more importantly, also many large wealthy people still don't have good advisors for them to manage their wealth. So I think we see a great potential in this business to grow. And we have seen the last 10 results which we have sort of announced so far. Consistently, we have given a good performance. And going forward, also, I think we expect excellent performance. For the current year guidance, if you want to know, I can share
Yes.
that with you.
Absolutely,
That
sir.
for the current year, we expect our revenue to grow from 725 crores, 750 crores, which we achieved this year. Last year, we'll go to at least 910 crores in terms of
Okay.
revenue, which is more than 20% growth in the revenue. The profitability is likely to increase from the present level of 225 crores to 280 crores, which we expect again about 25%, 25% growth in the profitability. And as far as AUM is concerned, AUM is obviously a large function from the market also, how much market goes up. But still we expect from 59,000 crores to go to 72,000 crores by the end of March 25. So in all the areas, we expect good growth in this year as well as we have been doing in the years before.
And as is always, we have seen that you've always given a conservative guidance, but you've also over delivered every time. So we are hoping on these targets also that in FY25 you will be overshooting them much before your promised guidance as well. And we will come back to that. Mr. Raval, to you on the EBITDA margin front, 39.7% this time around. How do you see the progress going forward from you as far as the margins are concerned?
We believe that margins of around 40% is what we strive for. And therefore, if we get some operating leverage, we are wanting to use that to strengthen the company. For example, this year, we've strengthened our marketing department. We've also introduced a new segment, which is 50 crores plus, which is the platinum segment. And therefore, we're working on how to strategize with clients who've outgrown the 5 to 50 segment that we started with. And therefore, if we keep thinking and adding back to the business, then the sustainability of 40% becomes much longer. And that's the way we see margins.
Okay. Mr. Rathi, particularly in this quarter, the noteworthy performance was also from the equity mutual funds, as has been for throughout FY24 as well. It's witnessed a robust growth of 47% year on year to 4,628 crore rupees. Do you see that continuing, especially now when we are looking at several headwinds emerge for the equities at large? At this point in time, we are looking at geopolitical concerns emerging. Again, the uncertainty on the inflation front as well. The safe haven assets are also at record high levels. How do you see this factor really playing out for you?
You see, I think our philosophy, Sakshi, has been that if you have to be a long-term investor, which is what we want, and most of all our investors are long-term, or for a long-term investor, one should not really get influenced by the events. One should continue to invest, of course, stay invested, which has been our policy, and as a result, I think our clients have really got good rewards for staying invested. Even in the bad time, when pandemic came, during that year, perhaps we were among the very few distributors that we increased the mutual fund allocation for people. So my belief is that, yes, geopolitical situations will come. We have seen Ukraine for last 2 years. When it comes, it has some immediate impact. But in the long term, I don't think these events really influence markets. If you have seen in last 2-3 years, we have two big events. In spite of the market has only gone up because I think markets are driven by the economy. Markets are driven by the corporate earnings. So I think, to my mind, for Indian economy today, we are the best performing economy in the world. Next few years, again, we expect to be extremely good. The way the new investments are coming, infrastructure investment is coming, the way taxes are now, collections are going up. I think you see a lot of optimism all around. I'm sure anybody you're talking to today, you can see the difference in the optimism of people. So my belief is that these events should not at all, change the mind of the investor or the client to keep on investing. And that's what our philosophy is. So we have seen ups and downs, but our growth has continued to show because we think the clients, if they remain invested, continue to put in more money into the equity class, I think ultimately they'll be big here.
Okay. Mr. Raval, if you could highlight as far as your digital performance has been, we've already seen 15,000 odd crore rupees of NAOM contribution from this space. For this quarter, how was the performance going forward? What is the outlook on this one?
I think from where we were in digital, where we were burning cash, to where we are in digital, where we are making marginal cash, it's a big journey achieved. Yeah. However, the journey ahead still needs to sort of crystallize itself, and we are hoping that over the next few years we can really make some large contributions in that business. However, at this point in time, we are we are saying, hey, growth of our company is more predominantly governed by the main company, and we'll keep endeavoring to make the other businesses better. And as and when we succeed in that, we'll bring it to you. But at this point, we are in that experimental stage.
Okay. Mr. Rathi, could you also tell us a little bit more on your market share at the end of Q4? Where were you at, and what is your aspiration? By when do you really see 4-5% mark really coming in on that front, sir?
Yes, that's we may be just about 1% of the market today, but our goal is to reach 5% in next 4-5 years as quickly as we can. I think we have seen that as the number of clients increase, we get more and more referrals from the existing clients. I always believe a happy clients bring 5 more clients in, and that's what is happening. You have seen year after year, quarter after quarter, our client acquisition is going up. The new money coming in, net inflow is going up. I think we are moving. Even today, as you know, we among the non-banks and non-aggregators, we are the largest distributors of mutual fund. Our AUM in equity mutual fund is highest, and our revenue again is the highest. So I think we are already up the curve. Obviously, you can't compete with the aggregator because we own the clients. We don't have a sub-broker network sort of thing. So I think long term, we will continue to be number one as far as direct wealth distributors are concerned. And as you know, we are again a pure wealth management company. Unlike most other companies have other businesses as well, like or other businesses. We believe that let us be a pure wealth manager, and we can do a lot of justice to our clients that way.
Understood. Mr. Raval, if you could also add to that, for say higher market share which you're already aspiring for, how many more RMs would you really need to add on that front? You already have been seeing an increase, and by FY24, what is the total count, if you can give us, and what's the outlook on that front?
I think we have about 330 odd RMs. We increased during the course of the year, 35 RMs. And we have a whole ecosystem of over 300 account managers who are being trained to be promoted to become RMs in the years to come, right? So therefore, today our dependence on outside recruiting is on the lower side. And therefore, do I see 40, 50 RMs being added every year for the next few years? Yes, I do see that. And I think we have the wherewithal to sort of do that as well. So that's one side. The second is that our client per RM is in the range of about 30, whereas the capacity is in the range of 50. So within our RM community, we have about 40% unutilized capacity, which can be used to further garner new clients and service new clients. So I think creating capacity is not an issue. We need to just keep forging ahead and do the best that we can in terms of capturing the opportunity.
Okay, just last word from you,
you
Mr.
might note, Sakshi, just 1 minute, as
Yes.
you might,
Yes,
perhaps
please.
we already have the largest number of RMs here, any other outfit has got. And as Rakesh said, that we are continuing to grow because of the ecosystem we have created.
Absolutely, sir. Noted that point. Also, just one point before I let you go. Through MLDs, what was the issuance this quarter, and how do you see the projection going forward as far as the MLDs is concerned, sir?
MLDs, the numbers we'll let you know. We don't exactly remember, but the mutual fund and MLDs as a combination. We are growing today. We have from 27 odd percent share of our assets in MLDs. We are at 24% today. From 47% of our assets in mutual funds, that's grown to 51%. So our long-term view is that our trail income, which is coming from mutual funds, which is in the range of around 37-40%, can be sort of up the ante to about 45-50. Yeah. And so that business is more predictable going forward.
Okay.
And yeah, just to add what Rakesh said, about 800 to 1,000 crores per quarter, we add on to the structured products. But then, they're getting redeemed also. So, but that's the gross addition we do every quarter.
Okay, understood that. Well, thank you to both of you, and thanks a lot for sharing all those wonderful insights with all our viewers and giving us a sense of how is the business going to go and look forward from here on as well. Always a pleasure to host you on Business Today Television to get an understanding and insight as to how are you progressing the business, and for all our viewers, it is very valuable. Thank you so much. Always a pleasure to host you. Thank you.
Thank you.
Thank you. Thank you so much, Sakshi.